What's up? Welcome to the live stream. I just did a video on Zim. I'm still editing it, but it's tough. It's I mean, like any company, it's hard to predict what they're going to do in the future. But I think the shipping industry is a little more difficult than the average company because it's very cyclical, and you just don't know where rates are going to be, right? I mean, I'm at $21 a share. They're trading at $10 a share. And I added some more detail to my financial section on my video. I don't know. I think I saw this somewhere. Maybe I saw another video. Alex, wow, look at that. I appreciate it. That's really nice of you. How's it going? How's the Amazon deliveries? So I always show free cash flow, net income, and revenue. Tal, what's up? I like that pic of Bart Simpson. I was a huge Simpsons fan growing up. I watched The Simpsons before it became The Simpsons on I don't know if you guys remember or knew this. The Tracy Ullman show. It was like a sketch comedy show, like SNL, Saturday Night Live, but obviously not as prominent. But yeah, Tracy Ullman, I think in like 85 or 86, they did these cartoon sketches, between the regular like human sketches. And it was The Simpsons. And it was so popular on Tracy Ullman, they made a TV show, The Simpsons. And I was in 87. I was so excited because I used to watch Tracy Ullman just to see The Simpsons. And then when they made The Simpsons a real TV show for 30 minutes, I loved it. It was by far my favorite show. But after like maybe the 6th or 7th season, I kind of lost interest. Maybe I got older, so I don't really watch it anymore. But so Zim, when they started trading, like in 2019, it was huge. It was so hot, the stock, and they were paying like a massive dividend, like literally like a yield of 80% at its peak, because they were generating, look how much free cash flow, 5 billion, 6 billion, and they don't need this much free cash flow. So it was all going back, trying to get to a block today. I do the flex. I can work whenever. Oh, that's cool. You can work whenever. I didn't realize it was that flexible. That's always nice. But you have to like, these stats are like, when you look at revenue, but I'm hoping I screw things up. So one share of Zim is $10. Okay. They generated 5 billion of revenue in 2023. Now, if you take that revenue and divide it, I'll do the math so you can see what I mean. So revenue. I got to reformat it. Revenue 5 billion. And they have 120 million shares. So this is what I did. I did revenue per share. So if you own one share of Zim stock, your portion of their revenue is $43, which is a lot because one share is $10. So most of the times when you look at a company and you value a company, like if the company's trading at 1 times revenue, that's usually really, really good. Like if you look at like a Meta, they have 1.2 trillion. That's the value of the company. And their revenue is 135 billion. So they're trading at like 10 times revenue. Their market cap is 10 times their revenue. But Zim, their revenue is so much higher than their market cap. Look at their market cap, 1.2 billion. And they have 5.2 billion of revenue in 2023. So they generate so much more revenue than their market cap, which is not common. Even in the shipping industry, if you look at the price of sales, I think I messed up the formula when I was screwing around here. Let me fix this. X over AC. Where is it? Oh, X. Okay, VLOOKUP A14. So, yeah, let me fix this formula. I see what I did. Why do I own Zim? I don't think it's that. I'm not a big. Yeah, I don't think it's that good of a stock. It's too cyclical. Shit, I gotta fix these formulas. I messed up my. Yeah, I don't like the shipping industry. It's too volatile. I think we missed the boat, no pun intended, on Zim. If you bought at IPO, you would have made like double or triple your investment just in dividends. So I'm just, but it's come down a lot. So maybe I'd consider it now, but it's just so volatile. There is a pretty significant risk with Zim that it could go out of business. So that's my my main concern with Zim. It might not be an active company in a few years, because if shipping rates stay at these low levels, these shipping companies cannot make money, and then the bigger companies will buy the companies that go bankrupt. They're gonna have to sell their ships at a discount, and the bigger companies can pick up those ships at a cheap price. Could you do USAS as one of these days? They are silver mining, and silver clearly undervalued. Could USA? You know what kind of bothered me? That I don't want to say who this was. You know how I do these live streams? I always want to try to get people other people to join the live stream. And it doesn't have to be another YouTuber. It could be somebody watching. Yesterday, Hi There Guys came on the live stream. He was awesome. Like, I learned a lot of new things. Like, he really knows his stuff. So I email a lot of YouTubers. Not a lot. I've done it a bunch of times. I email usually finance channels, and I just ask if they want to join me on a live stream. And I usually email people who have less subs than me. Once in a while, I'll email somebody with more subs, but I don't care if you have 5 subs or 5 million subs. It'll just be fun to have the interaction. Well, all stocks can go bankrupt, which is true, but it's much, much less. Certain stocks are much less likely to go bankrupt. Stocks that, like a company that generates a lot of revenue and has like big profits, has been around 50 years and is very successful, is much less likely to go out of business than a startup who's still losing money. It's just like you have to weigh the. So I email somebody who has less subs than me, so I could. And this is what he said. He's like, thank you for your interest in partnering with me. I get a lot of requests for collaborations, sponsorships. Some are genuine, and have led to great partnerships. However, most are not so genuine. Every day I get at least 10 spam emails, but it's so obvious, the people who are spammy. If it's a legit person, like, I could usually tell. Once in a while, I'm not 100% sure, but there's ways to figure it out. So this guy says, so to reach the genuine opportunities, I reply with this email asking for you to verify this is a genuine proposal. This is just ridiculous. He's like, so to do this, become a member of my channel. It's $2.99 a month. Then comment to any of my videos on YouTube. I will then see you are a member, genuine and verified on Google/YouTube. I will then reply back to your comment and we could take this further. I'm not going to pay him. I mean, I don't mind supporting other YouTubers. Like, I've done that before. But I'm not going to pay him to prove who I am. I mean, there's other ways to do it. We could Zoom together and I could just show my face. There's a million ways to do it. We don't even have to Zoom. Like, I can, like, that's what I do sometimes. If I want to verify who they are, I say, comment on this video like tomorrow or something. And no one else knows I told him to comment. So if he comments on a video with the words I say, I know it's like the person I'm talking to. Isn't that ridiculous? And there was another guy who had 100 and something thousand subs, and he was like, I didn't ask him to partner with me. He just, I think out of the blue, maybe I asked him to partner with me, but out of the blue, he sends an email saying, if you give me like $10,000, I can like promote your video and do this and that. And I'm like, I don't even see the benefit. And he goes, and then I can be on your live stream with you. I said, but how does that benefit me? Like, I mean, it seems like it's all beneficial to you. I'm going to give you all this money. I go, what do I get out of it? iFlow. Thank you. That's really nice. Really appreciate. And I don't ask people to donate. So, but if you do, it's really nice. It motivates me to do videos. It's so scummy. People who ask for money. I don't mind if you're providing something of value. If you have like your own platform where you provide information on stocks, yeah, you can sell memberships. That's fine. And if people's it's their own choice, right? It's kind of like Apple. Like Apple is getting in trouble for running a really, really good business. Like you can't get too powerful in the U.S. The U.S. government doesn't like it. Somebody too powerful. But I mean, I'd like to do this full time, and this where I don't even need to make that much money on this. If I could just make like $5,000 a month on YouTube, I can do it full time. I wouldn't be able to go on vacation or anything, but at least I would be covering my expenses. But I can't even make $1,000 a month on YouTube. So it's really hard to make money on YouTube. I worry about Tesla having an energy monopoly one day. I don't really worry about Tesla having any monopoly one day. But that's just me. I mean, they're not really doing that great of a job growing their monopoly. Are they? What type of investor are you? Well, definitely long-term investor. 95% of my portfolio is, I consider it long-term. Like my retirement, my IRA retirement account, I bought all the investments, pretty much everything in there from 2017. So I haven't touched it in 7 years. It's just 4 things. It's just, come on. I just got BRK, SPY, Meta, and I think it's PDP. It's a mid cap. It's an index of mid cap stocks. Yeah, I don't think they could go to business, but I would say there's like a 20% chance of them going out of business in the next 2 years. I don't think it's likely. But if shipping rates continue, because look at the so they're an Israeli company, but they report their financials in US. Hi there, guys. What's up? Thanks for joining us today. That was a lot of fun. If anybody wants to be part of a live stream, let me know. I'm more than happy. And you don't even have to know anything. You don't have to even talk a lot. So don't feel like nervous about it. You'll learn just by being part of it. Oh yeah, in my 20s, I was crazy in my 20s, in different ways with a lot of things. Now I'm just not talking about investing, but yeah, I used to do options. I used to do I used to plow all my money to one stock and sell it the next day. I've done everything, but now that I have more of a bankroll, and I'm older, and yeah, I definitely am not as risky as I used to be. I still like to do some risky stuff here and there. Agav, what's up? I had Zim cashed out before it got destroyed. That's amazing that you cashed out. But hi there, guys. Yeah, hi there, guys. I don't get like the holding cash for 10 plus years, but it's a different animal. It's hard to compare a business to a person, but yes, they have the most cash in the world. But they're an insurance company; they have an enormous amount of cash that they have that's on float. So they But most of their portfolio is invested. They just have a strategy. Like if I had like they have opportunities. Like if a business, if there is a market collapse, or if a certain industry has some, starts to struggle, or a certain business is like needs to sell itself, they have the cash to just gobble up pretty much any business right away. That's the benefit. It's kind of like if I was a real estate investor, I would probably want to keep like a few $100,000 in cash, because if my neighbor lost his job, and say his home is $700K, like say both our homes are $700K, my neighbor lost his job and he really needs cash, I can like go, I'll give you $600K. I have it. You can sell your house today. He'll probably take it rather than waiting 6 months to get the $700K from someone else, and chances are he might not even get it. Amit Palantir is a big channel, and he partners with a lot of people, and he is humble and won't charge you. He has 75,000 subs. Yeah, I'd love to like partner with anybody. And it's just a pain to contact people and ask them. Most of the time they're skeptical. But if anybody ever was interested in doing a live stream with me, which rarely ever anybody asks, I'd like to do that, because it's good to like, I would grow my channel by getting some of his subs. He would get my subs. You should make your own channel. I'm telling you, if you want to learn about anything, just make a channel. It's hard to start a business. Like if you start a business, like if you want to learn, like I started the math tutoring center. I was good in math, but like I learned so much more by teaching kids. Like I kind of perfected my math skills. But the best way to learn is to teach someone. And a YouTube channel is free. And you might go the first year without even getting that many subs. Or even like me, I made mistakes in the beginning. I used to say certain things wrong, and then I would look it up, and I'm like, oh, what was I thinking? Like I remember the first time I think I did a video on Rolls Royce, I thought it was a car company, and then I'm like, didn't even realize they don't make cars anymore. Even though Rolls Royce cars are out there, BMW sells Rolls Royce cars. Rolls Royce is a aircraft engine manufacturer. But if you ever want to do a channel, you can get probably 50, 100 subs if you do one of my live streams. So Zim, there's really not much guesswork to investing in a shipping company. I used to have this kind of like message I would send. I would say in the beginning of each shipping video. The hell? I'll just go through it real quick. So the supply of ships in the market is correlated to the profitability of shipping companies, because the cost to maintain a ship is pretty stagnant. Like if you have a brand new ship, you know how much you're going to spend to maintain it. Same thing if you have a 10-year-old ship, you know how much it costs. So the expenses, which fuel is a big expense for shipping companies. Of course, payroll is an expense, and then you have to, if something breaks on the ship, there's things you have to do to maintain it. Just like any fixed asset, if you own an airplane, there's certain expenses that are going to be there. But it's pretty, you know what your expenses are to maintain the ship. The volatile part is shipping rates. They're all over the place. And it's pretty much how many ships are in the market. If there's they have a chart. This is Zim's investor presentation. This is the supply demand balance, and it's not okay. This is the fleet capacity. These lines. So anytime you look at cargo shipping, anytime you look at a cargo shipping company, they pretty much measure supply in terms of TEUs, 20-foot equivalent units. They are those big boxes that go on a ship. And that's how you transport things. You put it inside these big 20-foot equivalent units. So no matter what you ship, if you're shipping iPhones, you could probably fit, 1,000 iPhones, in the boxes in one unit. If you're shipping couches, you can maybe fit like 8 couches. So you pretty much ship things in these TEUs, 20-foot equivalent units. They're 20-foot containers. So here's the demand. In 2014, there was 18 million TEUs, the demand. Demand will always be there. No matter what happens, they can hold 50 refrigerators. Wow, I didn't know. That's good to know. It's hard to see it but that's interesting. 50 refrigerators. They're really big. They're deep, and they protect against rain and bad weather. So demand will always be there because the U.S. has to really import. It's just so expensive. I don't know if you're involved in any types of companies, like a manufacturing company. I do consulting for different companies, so I know that most businesses cannot survive by buying U.S. made stuff or making stuff themselves in the U.S. It's just so expensive. Payroll is sometimes 10 times the amount it is in other countries. You just can't survive. So you have to kind of import. It's just a million times cheaper. I consulted for this company, and they imported maybe 10,000 products from China. I'm not gonna say what it is. It doesn't really matter what it is. And they paid like $200,000 for those 10,000 products. It came in a big ship to the port to LA. And then there was an issue with some of the products. Something was defective on the product, so they couldn't sell as is. So, but they couldn't. But all they had to do. They can pay somebody to open a package and do something to the product, like remove something or change something to the product where they would be able to sell it. So it wasn't like they had to get it remade with the manufacturer. So they just needed to maybe get a few hundred hours of manpower. So maybe if 30 people can work for a full week, and they could give those 30 people $200,000 for the week, they can get the products fixed so they can sell the product. And obviously, if they pay $2 million, they sell it for $4 or $5 million. These 10,000 products, but they couldn't do this in LA. Even though the products were in LA, they couldn't pay people in LA to fix the products. so they can sell it. It just was so expensive. Even if you get a minimum wage person, it's still almost $20 an hour. So they had to ship the entire the entire crate, all the units. They had to ship it to Mexico because Mexico is pretty close, and then pay those people in Mexico to fix the products up, and then ship it back to LA. And it's cheaper that way because they could have paid $200K for the people in LA to fix the products, but instead they paid like $50K to the people in Mexico to fix the products. And whatever it costs, like maybe $10K to ship it from LA to Mexico, then another $10K back to LA. Yeah, robotics could change these things. What is going on with shipping? I'll check that out. So, but the problem is, okay, okay, so the Baltic Dry Index. So if you want to track shipping rates, you can look at the Baltic Dry Index. If you're not sure what the Baltic Dry Index is, it's an index of average prices paid for transport of dry bulk materials across more than 20 routes. So they look at different companies that move dry product. When it says dry, it means like if you transport oil, that's not part of the Baltic Dry Index. But if you transport like coal or like furniture, that's dry. Anything in those 20-foot containers. You can't put oil in those 20-foot containers. Oil is, a little more specialized. If anybody wants to join the stream, you can join as a co-host. So the Baltic Dry Index Zim target this year, and thank you, Gary. Okay. So as we know, the expenses for shipping companies are pretty static, as we already determined. The thing we have to figure out is where shipping rates will go. Because if you make a product, like if you're Apple and you make a phone, you pretty much know how much it costs to make that phone. I mean, you have a pretty good range, right? Of course, things may change, but like say it costs Apple on the low end, like $60 to make a phone. On the high end, $100. Depending on the location where they make it, if like things go wrong, all these things, shipping. If if the price of like a certain plastic goes up a lot or goes down, so between 60 and 100, they know that's the range. I'm just making this up. So if the demand for phones is like $500, I mean, they know their margins where they are. But if phones, if there's a big competitor now, if Nokia gets back into selling phones and no one's paying $500 for an iPhone anymore, and then if they have to start lowering the prices just to keep up with competition, that's kind of. So you can see, look how high, shipping rates. Okay, this is way back. You can see how low they were before 2003. But So if you owned these shipping stocks in 2008, you made amazing returns. It's almost like an option, shipping stocks. Like if you happen to buy it right before the big surge, you'll be like double, triple your investment, or 10x your investment. But if you buy it at the wrong time, your stock price, the value of your stock, can go down like 80-90%. In 2021, that's when Zim, right before Zim IPO'd, was before this big surge, and everybody piled into Zim stock. And not only did Zim stock go up like, went up like 5-10x. So they IPO'd at 12, and that was in January 2021. It peaked like 14 months later. It went from 12 to 84, so it went up 600%, a 7x growth. Plus, imagine you bought it at IPO for 12, even if you bought it for 20. Look at these dividends they paid. Just one dividend, the March 2022 dividend payment, $17. So if you bought it for 10, 12, 15, even 20 within the first 6 months, you would have got almost all your money back in just a dividend payment. But even if you missed that dividend, you still got like almost $3, almost $5, almost $3. So that's 5 plus 3 plus 3. That's 11. So about $10 in dividends in just what, 5-6 months. So you would have got pretty much everything back in dividends plus all that upside. You got that dividend. I mean, what country do you live in, if you don't mind me asking? And did you have to? How much did you actually get? Because I'm always getting a little confused on how much you pay in taxes. Because I don't think you would have gotten the 100% dividend. I think it's an Israeli company. I think you would have probably gotten like 70% of the dividend. So if it was a U.S. company, I kind of know how much you would get. But like usually, if you get like $100 in dividends from a U.S. company, you might have to pay 10-15% taxes, depending on how long you held the stock. 75%. But then you have to pay taxes on top of that 75%, right? So you end up getting about half the dividend. So the Baltic Dry Index is a great indicator of where shipping stocks will go. Not that you would have known. The thing is, if you would have looked at this index in 2020, you would have saw the index was around 700, which was a pretty low level. It was even lower in 2016. So, but the thing is, if you say you followed this like all the time, and in 2008, you saw how high shipping rates were, the highest ever, almost over 11,000. But then, like, it's hard to know when to buy it, because if you bought it here, you would have gotten a big surge here after 6 months or so. But say you got it here, you would have had to wait like what, 8 years before it came back up. So it would be hard to identify the bottom. Even if you did identify the bottom, it could trade sideways for like a really long time, and the value of your stock would erode a lot. Because if you got it over here in 2010, you would have made a good return in 11 years later, but by the time it got there, your stock price would have went down like 90%. Well, it depends on the company. Dividends are inefficient for a company like a tech company, because companies like that, Meta never paid a dividend until recently, and most tech companies don't pay dividend because there's so much opportunity to grow. They can scale and they can always keep growing. They kind of like you're kind of capped in this industry. You can't just keep growing, because then shipping rates would be like so low that nobody would make any money. I think a good way to explain it is with gold. Like the cost to extract an ounce of gold. Because commodities is just a different animal altogether. Could they have bought back shares though? I guess they could have bought back shares. But it's kind of the same thing as, in a sense, as paying a dividend. It would just be returning money to investors, just a different way to return money to investors. I mean, the only difference between buybacks and dividends is that dividends, you're forced to take the money. I mean, you could obviously just buy more shares of the stock, but buybacks, you're not kind of forced to use the money. Your stock price goes up. You don't have to sell your stock. Dividends, you're forced to take the money and pay taxes. This is not good. Okay. How much is an ounce of gold? Is it around 2,000 now? 2,200. Like an ounce of gold, that's how much it costs in the open market. So if you are a gold miner, you can sell an ounce of gold today for 2,200, 2,400. Let's just use 22. It doesn't really matter. And the cost or the expenses in order to produce an ounce. If it's $800 to produce an ounce of gold, like that's your average cost. Obviously, you're producing probably thousands or millions of ounces of gold in a year, but on average, it's like $800. So obviously, it's worthwhile to spend the money to try to find more gold and extract it from the ground. But if you start, I mean, a lot of gold miners have gold reserves, like millions and millions of ounces of gold reserves. So when the price of gold gets really high, gold miners can start taking their reserves and selling it. But if the market gets flooded with gold, eventually the price starts coming down, and it might get down to like, if it gets down to like 1,000, like it's very little benefit. I mean, you still may need to sell the gold to try to maintain your business, but there's not much benefit. And if an ounce gets down to 700, which just happens, you lose money every time you sell the gold. And then what happens if you lose money? Then less and less people are trying to find gold, right? And then it gets more scarce, the commodity, and then the price goes back up. But you don't want to like flood the market if you start making a lot of money in something. I mean, it may seem logical to sell more because you're making money, but with certain things like commodities, you kind of have to have a balance. But it's hard to have a balance, right? Because if there's money to be made, you'll see new companies enter the market. Like Berkshire does that a lot. When there's money to be made, they'll enter the market for something, maybe for only a year or two, and then the gap closes. You know, all the profits close, the arbitrage profits close up, and then people start exiting the market and leaving the market because there's not much opportunity. Barrick Gold. Yeah, I mean, it's like, can you predict the price of gold? I mean, if you bought gold, you're probably up now. Everybody should be making money if they bought gold. Obviously, it depends when they bought it. But if you bought gold anytime from 2012 to 2019, if you're still holding, you're doing well. If you bought it at this point, I remember when COVID hit, I bought a lot of gold. I bought 100,000 in gold, 100,000 silver, and I pretty much doubled my gold. Silver didn't do as well. I made like maybe 30% on silver. It must have been the opposite. I thought I did. Yeah, I got to look at it again. I must have doubled my silver, and the gold didn't do as well. I thought it was gold did well, but because I bought it like right when the market crashed. In my wife's account, I sold a lot of her stocks and bought gold and silver. But everything went up right after the crash. Everything skyrocketed. It wasn't like, I think I bought it in like April, like around here, like this gold. And I didn't sell it at the top here. I think I sold it after like a year. I usually wait a year. So March 20. So I must sold it right here for both of them. So yeah, my silver pretty much doubled. Gold went up like 25, 30%. But buying commodities, I don't think is a great long-term play. Because the commodity can't really go up indefinitely. It has to go up and down depending on supply and demand. But like a stock price, like if you look at a good company's stock price, it does go up over time. Like any really good company, like Microsoft. But commodity is generally going to be up and down, up and down. It will go up over time, but it's much flatter, the growth. But the good thing about a commodity is it's not going to go to zero. Like certain stocks, a lot of stocks will go to zero because companies go bankrupt all the time and they go out of business. But a commodity can't really go out of business. I guess unless nobody used the commodity ever again. I guess that's possible, but I don't really know. Like gold and silver and oil, they're never going to zero. That's always going to be there. I'm trying to look. Like if you look at Ford stock, you would have been better off I guess with gold or silver, because since 2005, so 19 years, Ford is down 6%. But let's do Zim. Let's do more Zim. But how do you I think a good way to figure out if a company is going to go bankrupt is look at their operating cash flow. So for 2023, they had $1 billion of operating cash flow. So they were generating cash. So even if they were negative cash flow, then you would figure out the runway. Do they have a year, 6 months, 2 years before they? So they do have, since they have positive cash flow, unless they become negative. Not so. I think a concern with Zim is their debt. They don't have much long-term and short-term debt, but they do owe a lot on their leases because they have a good chart right here. Let me know. I've lost a bunch. When you lose money on a stock, you hate it. You almost never want to invest in it. It's very cyclical. I did videos on Zim because people asked me to do videos, and some people lost money and blamed me. I did 1,000 videos. I wouldn't invest in all 1,000 stocks. So there's no way to know if a stock is going to go up or down, especially a stock that's linked to a commodity. So they have 150 vessels. I mean, they have a really, really strong balance sheet because they have so much assets. But the thing you have to remember is when people look at the balance sheet, they go, okay, 8 billion of assets, total assets, 8 billion. Liability, 6 billion. Okay. And then when you look at their price to book, because the price to book, if it's below 1, that indicates the company is worth more if they file bankruptcy than as an active entity. Because if it was 1, that means their equity would be equal to their market cap. But it's below 1, so their equity is double their market cap. Their market cap is 1.2 billion, and the equity. I wish they would list equity, but equity is assets minus liabilities. Come on. Assets it's taking a long time. Oh my God. Liabilities. Total liabilities. Okay, the equity, the value of the company according to the balance sheet is $2.5 billion. The market cap is $1.2 billion. Come on. So the price to book is market cap over equity. So the price to book is 0.5. I was so stupid to use. I use PE ratio on cyclical stocks and purchasing, expecting them to. Well, that's how you learn. When I remember when I was like 19 or 20, I remember I read PE. It was the lower the PE, the better. And I thought it said the higher the PE, the better. So I did all this analysis looking for really high PE stocks. And I started buying the high PE stocks. And I made a lot of money. And then I realized I did it wrong. I'm supposed to be looking at low PE stocks. But you remember those times really well. I mean, I didn't have a lot of money. I only had maybe $1,000. So the value of the company, according to the balance sheet, is $2.5 billion. So this implies if they sold all their assets, and their assets are mainly the vessels, right? The ships, 3.8 billion of vessels. Then the containers, those big boxes, 800 million. And they have other investments. So they sold all their assets, the 8.3 billion. That's how much they would have in cash. Theoretically, 8.3 billion if they sold everything. And then they used that cash to pay down. Oh, it's right here, equity. I didn't see that. I'm so stupid. It's 2.5 billion. Okay. If they use the 8.3 billion of cash and pay down all their liabilities, this is what happens if you go bankrupt. But when you go bankrupt, when you're forced into bankruptcy, you usually don't have any money left over. But if they elected to go bankrupt, they elected to liquidate, they would use this cash to pay down all their debt. And what would be left over is $2.5 billion. And that's your money as an investor. That's your money, right? That's the value of your investment, $2.5 billion. But you only have the value of the company in the stock market. What it's trading at is 1.2 billion. So that means it's worth more in bankruptcy than as an active entity. So each share trades for $10, but the book value is $20 per share. So you're better off just liquidating the company. But of course, that's not true in real life. It's not easy to liquidate $8 billion of assets. Your chances are you're not going to get a good deal. You have to sell it if you really want to sell like this right away. If you wanted to get the full 3.8 billion, it might take years. But if you wanted to sell it within 6 months, you'll take a discount. But they need the vessels to run their business. So they're not going to be selling their assets because they're not looking to liquidate. They want to run the business and grow and become profitable. So that's why looking at the price to book for these companies isn't like that beneficial, because they need all their assets to run their business. It's not like if a company if they had 3.8 billion in accounts receivables, those are good assets because they will be getting that cash. And then they could use the cash to grow. So they need so the price to book looks great, but we can't do anything about that because they need these vessels to operate their business. So they have 150 vessels, and they've been adding a lot of new ships over the years because they had so much extra money. And you can see how much they spend in CapEx if you look at that statement of cash flows. If you look at the investing section, acquisition of investment instruments. Oh no, here it's not. They're not investments. The investments is below that. So they spent $1 billion in CapEx in 2021, 345 million in 2022, and 115 million. So they spent 1.5 billion in acquiring vessels the past 3 years. So they've been aggressively growing their vessels. So 150 vessels, 134 container ships. Those are those big 20-foot equivalent units. 134 of those. And you can see they have 10 vessels that can fit 15,000 20-foot containers. Those are really big ships. They have 4 ships that can fit 12,000 20-foot containers. The most common ship is they can fit 8,000 20-foot containers. So the more containers a ship can fit, obviously the bigger the ship, as you can see here. And LNG fuel is supposed to be more efficient. That means they use liquefied natural gas to as fuel for the ship. So these are better ships. They're more cost effective. So 134 ships to carry these big containers. They have 16 car carriers, ships that just transport cars. Because transporting cars, you could really only do it by ship, right? You can't really fit that many cars on a plane, and you can't drive the cars from China to the United States. So you have to fill up these vessels with Chinese cars or whatever country, and transport them to the U.S. or Canada or whatever country that wants to buy those cars. So 16 car carriers. But you should remember that they don't really own many ships. Of the 134 container ships, they charter 120, which means another company owns the ships. And they it's kind of like renting a car. When you rent a car, even if you rent a car for like 6 months, you don't own the car. I mean, you have access to the car and you have to maintain the car to a certain degree, like obviously gas. So they own only 14 ships. Of these 115, only 14 are owned by Zim. And all 16 car carriers are chartered. And I think it's kind of like airlines, it's kind of a similar type of thing. Like it's very expensive to buy a plane, but if you can kind of lease a plane from somebody that owns one, I don't know if Boeing leases planes. They probably do. Wait, I probably missed this, but why did Zim do so bad in 2023? Let me pull up the stock price. So they IPO'd around, like $12 or something in 2021. By the end of 2021, they went from 12 to 57. So they went up 400% in that first year. And then in 2022, they went from 57 to like 17. So if you bought it, like a lot of people did at the end of 2022, at the beginning of 2023, when the stock was hot, they would have lost like 80% of their investment. But 2023 wasn't as bad as 2022. 2023, they started at 18 and they ended at 15. So it went down like 10, 15%. And they did eliminate the dividend, but they did pay a nice dividend in April, $6.40. So if you bought it at the end of 2022, like the first day of 2023, you would have got 30% of your investment back in dividends. So you would actually made money in 2023 if you bought the stock on January 1st, 2023. Your stock would have went down $6, but you would have got that back in dividends. 2022, it's really the same answer. Not that I'm criticizing you for answering, but it's always the same answer. Why did Zim do so bad in 2022? Well, why did this marine shipping stock do so well in 2008? It's just shipping rates. You see, shipping rates at the end of January 2021 were 1,500, and then they went to 5,000. So shipping companies made so much money in 2021. And the rate was still over 5,000 by the end of 2021, but then rates came down a lot. And by January, they were under 1,000. So they are rebounding a little bit. They had a little boost at the end of 2023, the rates. But rates are just coming down so much. That's why Zim lost a lot in 2022. Well, Zim's earnings in 2022, 4.6 billion, 2023, negative 2.7 billion. But the only reason in 2022, they were still generating a lot of free cash flow. Because you have to remember, even though rates were coming down in 2022, they locked in a lot of these contracts in like 2021. So they were still making a lot of money on these contracts they did with these with the companies they were delivering products to. So there's usually a lag in a lot of things. Like if interest rates go up, people don't file bankruptcy the next day. Even if interest rates go from 5% today to 15% tomorrow, I won't go and file bankruptcy the next day. It would take maybe a year, because then maybe my if I have an adjustable rate mortgage, or like I need to like borrow money, it takes time. So there's usually a lag with a lot of things. Like if the price of gas goes up, if say from $5 a gallon to $50 a gallon, I don't I might get a Tesla. It just might take a few months. Or you have to change, but you don't usually lose like right away. There's some type of lag. It could be 6 months or a few years, eventually, till things fall apart. But it is a little counting trickery. The reason they had in 2023, they did report a loss of $2.7 billion in 2023, but a lot of it was because they took a big impairment of $2 billion on some of their vessels. And you see in prior years, like in 2021 and 2022, they didn't have any impairments. They just had depreciation. So they reported really high net income. I mean, they did have a lot more revenue also. That's why you look at a statement of cash flows to figure out how they really did. And when you look at their operating cash flow, here's their net loss, but you have to add back depreciation. But the one big change was a $2 billion impairment. So they did generate $1 billion of operating cash flow in 2023. So it wasn't that bad. They just tightened their belts a little bit, lowered expenses. They cut the dividend. That's a big savings, and they also lowered some operating expenses. So they did have positive operating cash flow. So it wasn't like prior years, but it definitely wasn't as bad as their income statement appears. And here's their dividend. So in 2021, they paid $530 million of dividends. 2022 was the crazy year. They paid $3.3 billion of dividends. That's like triple their market cap today. And then 2023 is when they suspended the dividend, but they did pay, I think, one dividend in 2023, maybe two. But the second half of 2023, they didn't pay any dividends. And they're not going to be paying a dividend probably all of 2024. But if you want to learn about these companies, I think these presentations are kind of user friendly if you want to learn about how the company's doing or their future. So here's a high level: revenue down 59%. Adjusted EBITDA is $1 billion, down 86%. But adjusted EBIT is actually negative $400 million, because EBIT, it includes depreciation and amortization. But yeah, that's what I'm going to show you the guidance. Operating cash flow $1 billion, down 83%. I think the next page is guidance. They have almost $3 billion of liquidity, $2.5 billion of equity. They have a lot of equity, but like I said, they need their equity. They can't. If they're like Berkshire Hathaway and they have like $100 billion of cash or investments in other companies, they can sell those investments or use the cash to buy something or pay their expenses. This company can't really just sell all their vessels, or they could sell some, I guess. But so here's the adjusted EBITDA 2024 guidance is 850 million to 1.5 billion, which is 1 billion was their adjusted EBITDA for 2023, and their guidance is around that for 2024. Adjusted EBIT is between negative 300 million and positive 300 million, which would be an improvement from negative 400 million. Still, not good numbers to give a dividend, but enough to stay in business. Berkshire has 170 billion in cash. It's a lot of cash. They're trying to modernize their fleet. 46 new builds. So these are new vessels. Not a lot of these shipping companies buy vessels from someone else or refurbish ships. Which is a shipping vessel. I think these are like $10 to $20 million, these vessels. LNG is the way to go. Okay, a vessel could cost $200 million. It's kind of like a plane, like similar prices to the plane, maybe a little less. That's why some of them buy used vessels. Just like I bought a used car, because not that I can't afford a new car, but like I'd rather, instead of paying $40,000 for a new car, I'd rather get a 2-year-old car for like $25,000, because with the first year depreciation is like cuts it in half almost. Who wants to buy an LNG vessel with me, and then we can start shipping products? We could find one in the open market for like $500,000. I mean, these containers are pricey themselves because they have like 800 million of containers on their balance sheet, just these big boxes. Who wants to buy some containers and feel like we can where's so they're trying to optimize their fleet. They have 28 LNG powered. That's a lot cheaper, a lot better for the environment. Commercial resilience. Operate 2 LNG-based services on Asia, US, EC trade. They have the Z factor of customer care. Did anybody ever hear of this? The Z factor? You can't really put your finger on the Z factor, but it's something. The Z factor is that special ingredient found inside all Zimmers, no matter their role or title. It's what gives our assets extra pizzazz and makes our customers choose us again and again. It can't always be described in words, but you can feel it's there, always at your service. When you sell a commodity, it's a price point. It doesn't really matter. It's kind of like getting gasoline. I mean, obviously, if it's close to your house, you're going to buy the gas. But if there's a gas station, at $5 a gallon, and then across the streets, $6 a gallon, you're going to go to the $5 a gallon place. There's no reason to go across the street and pay more. I mean, I guess unless the $5 a gallon place, every time you use your credit card, you get someone steals all your money because they have credit card readers. But it's not like a customer service thing. Like I love the customer service at this gas station, so I'm willing to pay 20% more because you'll never a commodity. Gas is pretty much the same, right? Just like shipping, it's the same. I mean, it's a little, it's not like going to a doctor. Doctors have their specialties or like buying jewelry, right? Or clothing. It's not like all clothing companies are the same. But anyways, so let's go back to the Z Factor. They have that Z Factor customer care. So 2025 and beyond, modern, greener, fuel-efficient fleet, cost-competitive fleet, better suited for commercial strategy, leader in carbon intensity reduction. (2024) allocation priorities. They're investing in long-term growth, equipment, preserve cash. So I guess it would have been good if they didn't pay out so much in dividends and just kept the cash in-house. But I don't think investors would have liked that. So they carried 3.3 million TEUs in 2023. So it's only down 3%. So you can see they carried the same number of product in 2022 and 2023. It's only down 3%, but it's just rates came down so much. Rates, and that's the difference. Rates are down 63% compared to 2022. Revenue is down 59%. But this happens with a lot of companies, a lot of commodity companies. You might see a company, gold, that they sold 5 million ounces in 2022, and then 5 million in 2023. But when you look at their revenue, if the cost of an ounce, I don't think these are correct numbers. I'm just making it up. 1,200. So their revenue is so much higher in 2023, even though they sell the same exact amount of product. And they could sell less in 2023. They can sell 4.5 million ounces and still have 50% more revenue. Cash flow is down a lot, of course. Free cash flow, 919 million, down 4.9 billion. cash conversion cycle, this is interesting. It's 88%, so it improved 11%. I don't know if you guys are familiar with cash conversion cycle. It's like how long it takes to convert cash from inventory. How long it takes, how many days it takes to convert cash from inventory to like revenue. Am I saying that right? Trying to remember my CFA. Did you do the CFA? Hi there, guys. Or did you? You must have done something like got your MBA, or do you have like, or CPA? So the cash conversion cycle expresses the length of time it takes for a company to convert its investments in inventory and other resources into cash flows from sales. So how many days it takes, because they had to buy ships, right? And then they had to, I guess that's their main expense, the ships and the containers, and of course payroll. And how many days it took to convert, if they spent $1 billion on ships in say 2021, how long it took to convert that $1 billion investment into cash. Because hopefully when you like if you like if you're like a Tesla and you spend like 10 billion on a factory, and then then different equipment in the factory you might spend say $1 billion on, and then you have to buy like all these materials and parts and batteries for your cars, so maybe supplies. So say you spend 5 billion. I don't even know if these numbers make sense, but maybe 25 billion on supplies, and you use those supplies to make cars. So you already spent 36 billion, out the door. 36 billion. And maybe this is over like a 1 year period. How long does it take to get that 36 million back? Obviously, you want to get more back. Like you want to get like 100 billion or 200 billion back. You want to be really profitable on the sale of the cars. Because maybe if it costs you 25 billion to buy all these materials to make cars, hopefully you can sell these cars for say 60 billion. And then, make more cars, because it's kind of a fixed cost of factory. You don't have to keep buying the same factory. But within that same factory, you can keep making more and more cars. So how long does it take? Does it take you 6 months, a year, 2 years to get your 36 billion back? I'm a registered nurse by trade. Well, you're a nurse. I wouldn't have guessed that. Yeah, it's just rates have to come up for them to become profitable. Like they can't survive on these if shipping rates so low. So this is interesting. I'm familiar with the cash conversion cycle, but I don't really use it much. But it would be probably good in certain industries. Okay, this metric takes into account the time needed for the company to sell its inventory, the time required for the company to collect receivables, and the time the company is allowed to pay its bills without incurring any penalties. So it's usually it takes a while sometimes. For a Tesla, it could take, It could take a couple of years to get time. It could take like 2 years to get that money back. But I mean, if you're a barber and you open your own shop, and you might just lease a space, so it only costs you maybe like $5,000 a month, and then you just need a couple chairs and some equipment, and that costs you $10,000. It could be in 3 months you get your investment back, and then it's all profit after that. Certain industries, it's very low upfront costs. That's what they call barrier to entry. Anybody can do anything. You obviously need the resources, but anybody, if they get the money, they can do any business. Like you need some know-how, obviously, but if you wanted to start selling airplanes like Boeing, you could do that. It's just a very expensive process. You have to have a lot of knowledge, of course, and money, but you could do it. It's just such a high barrier to entry because it's so expensive just to even make one plane. But like, if you wanted to open up like at a barbershop, it's a much lower barrier to entry. You don't need like $500 million to get a factory and to get approval, to get licensed, all these crazy things. And you just need to know how to cut hair, which is obviously a trade, but that's part of like, I don't like to use the word moat too much, but because I don't think anybody has, I think barrier to entry, I think makes more sense, but it's kind of like having a moat in a sense when you're in an industry that's really hard to break into, because anybody can sell products like Amazon online. It's very easy. I do it in 5 minutes. I can sell stuff online. I can go to Amazon or eBay, or I can, for $100, I can start my own website. No one would buy from me if I started my own. I have no brand name, no reputation, but there's no really barrier to entry. The real barrier is like the upfront costs are pretty low. It's just getting credibility. Like a new railroad. I think we can develop our own drugs and vaccines. We can do it. You probably need to be a scientist and go through many years of medical school, things like that, and maybe $50 million and a decade to research and develop it. You could with the resources, but I think the real moat is brand name. I think that's the main. When you hear moat, I think of like Coca-Cola and McDonald's. Like they're just such like the brand is so influential. Come on, I need the sales, my vaccine sales. Hi there, guys. Please, consider it. The vaccines work. I did a lot of testing on a lot of monkeys. eBay is goated. I wish I had bought in the low 40s when I was looking. I've been using eBay since 1999, I think. I love eBay. I don't like Amazon. I don't have anything against Amazon, but I just love eBay. It's like part of me. Kind of like Facebook. I'm just so connected to Facebook as an investor because I made so much money on the stock. So it's a good metric to look at because you do want to know how long it's going to take you to convert these investments into cash. because with certain companies, like the one we're looking at, Zim, it can take a long, long time. CCC will, right here, the cash conversion cycle will differ by industry, which I think makes sense. That goes without saying. eBay paid your bills. I love eBay. It's so user friendly. I try to sell things on both eBay and Amazon, and eBay was so much easier. And Amazon is too competitive. Like, you have to be like, if anybody's selling Amazon, you have to kind of, what's that word? I can't remember. They kind of like, it's not verify. It's like you have to be like in the box. I think it's called. You have to be in the box. So if you go to Amazon and you want to buy like maybe the solar eclipse glasses, what the hell is that? Say I wanted to buy a bicycle. A lot of people will buy the first one, or at least if it has to fit your price range, of course. But most people aren't going to search page after page after page. I got containers at my company. We send a lot to Mexico from Germany, but you have to check European and Asian shipping stocks. Huge solar eclipse, April 8th. I'm in one of the best regions to view it. Solar eclipse. Hi there, guys. Are you Canadian? Or was that somebody else yesterday who's Canadian? Since CCC involves calculating net aggregate time involved across about 3 stages. So yeah, this is how you do CCC. It's days of inventory outstanding plus days of sales outstanding minus days payables outstanding. Oh yeah, so you're the guy who lives near Buffalo. They do have a good amount of debt. They have $5 billion of debt, 2.7 billion. But as long as they're generating positive cash flow, I guess that's fine. See that everything has really gone down a lot. Adjusted EBITDA is down 80% quarter over quarter. Year over year, it's down 86%. And their margins are getting squeezed. In 2022, their adjusted EBITDA margin is 60% compared to 20% in 2023. Anytime you hear margin, it's usually a percentage of revenue. Most things are a percentage of revenue if it's an income statement item. They have a big net loss, but that's mainly due to those non-cash, the impairments and appreciation. And here's where they ship their products to. Their biggest is Pacific, through the Pacific Ocean. I guess that's to U.S. Or I guess maybe, well, the West Coast of the U.S. Wait, am I saying it right? Yeah, okay. So okay, so yeah, if you're shipping, they're in Israel, so that isn't Israel. Isn't it around here? Isn't it near Iran, Iraq? Where's Israel? I don't see it. Oh, it's too small. Okay, right here. You can't see it from here. It's right near Egypt. It borders Egypt and Iraq. Well, Jordan. It's so small, Israel. Yeah, so they're Israeli. So they ship from Israel, and they probably have locations other places, and they ship to the Pacific part of U.S. and Canada, and also Atlantic. No, I mean, you can't see it on the map. That was the problem. Yeah, next to Egypt. Well, I knew it was around here. So Pacific is their biggest network. In 2023, 1.3 million TEUs. Intra-Asia is the second biggest. Oh, no. Yeah. Intra-Asia. Then Atlantic. I wish they'd change the colors. It looks almost identical, these two colors. Oh, I guess it goes from top to bottom. Okay, Atlantic is right here, 429,000. Latin America is the smallest. Cross Suez. So that's the Suez Canal. The Cross Suez. I don't know why I pulled up that. Cross Suez. I guess that's right near them in Israel. And I guess they ship Cross Suez. I guess that goes to Europe. Zim is the flag carrier of Israel. They are never going bankrupt. JP Morgan has a higher chance of going out of business. If Zim went bankrupt, that would be enough of a reason to change the government. That's a good point. They've been around 80 years, so it's not like they're a new company. Volume breakdown by geographic trade zone. Full year 2023 cash flow bridge. So this is interesting. They show you kind of like how their cash is used by kind of like category. So operating cash flow is $1 billion, and then they spend 100. This is for 2023. Then they spend 128 million in capex. I guess that's like to buy new ships. They received 27 million from selling assets, probably selling ships. So their free cash flow is 919 million. 1020 minus 128 plus 27. $919. I'll be right back. So they got more transport costs, but it's actually what's the number of one stock you're buying now, Scott? I like CrowdStrike. I still think it's a good value. Aren't the Muslim nations around Israel attacking Israeli-linked shipping vessels? Yeah, they always attacking Israel. And okay, so this 919 million of free cash flow, they paid out 919, 769. 84% they paid out in dividends. So they have 150 million left over. Debt service is 2 billion. So that's I think the big concern. Just to service the debt, that means you have to pay interest on the debt and the principal on the debt that matures. Net change in short-term loans, negative 21 million, positive 42 million in some other things. Not sure what that is. So the net cash position is negative 1.9 billion for 2023. So what is the negative? You can look at the statement of cash flows. The change in cash. See, this statement of cash flow is different than this. Cash at the beginning of the year, 1022. Cash at the end of the year, 921. Yeah, so statement of cash flows is different than that chart. See, they list their non-U.S. companies sometimes list non-current assets, then current assets. So they list their assets from least liquid to most liquid. In the U.S., we use GAAP, so it's the opposite. So we would have cash at the very top and vessels at the very bottom. So you could see the cash at the end of 2022 was 1 billion. At the end of 2023, it was 921 million. And that matches the statement of cash flows. The statement of cash flows it starts at 1 billion and the end is 921 million. And the difference is 96 million. They lost 96 million of cash in 2023. And to get the 96 million, it's operating cash flow plus investing cash flow plus financing cash flow. So most of that negative is from the repayment of lease liabilities. Because remember earlier, I showed you they don't own the ships really. They own like maybe 10% of the ships. They lease most of the ships. Like 90% of the ships are leased. But it could be a little confusing because when you lease certain assets that you lease, you carry it on your balance sheet as if you own it. So you do list it as an asset, even though you don't actually own it, you're leasing it. And you also list it as a liability. Generally, if you lease something, like you leased a car, you wouldn't list it as an asset. You wouldn't list it as if you own the car. You would just list the liability. What's up, Kevin? Accounting for leases is a bit confusing and complex. It depends on a lot of factors how you carry the lease or any asset on your balance sheet, if you carry it at all. Where were we? Right, we were at the. So I just want to see the debt service. What this was? Was it? It must have been principal. Keep doing that. Because their debt are the lease liabilities. And earlier when I said, like the company's worth 2.5 billion according to the balance sheet, which are the assets minus liabilities, they couldn't even liquidate the assets because most of these assets they don't even own. They lease these vessels. Like it's come on. Like they say it right here. As of March 2024, of the 134 container ships, 120 are chartered vessels. And 14 are owned. So 14 out of the 150 vessels are owned. So they only own 9% of their fleet. Thanks, Sameh. I think I hope I'm saying it right. Should have bought those vessels with all that cash. That's true. Thanks for coming and commenting. So they couldn't even sell the vessels because they don't own them. They just leased them. I want to learn about chartering, like how that works exactly, because I know it's not like as straightforward as leasing a car. When you lease a car, you just pay a certain amount of money for the number of days you borrow the car for. But when you lease a vessel, there's a lot more involved. It's usually a much longer term lease than just like a few days. It's usually like 6 months or several years. Chartering vessels. Okay, yeah, this is it. So there's a voyage charter, time charter, bareboat charter, and contract charter. Maybe I should do a video on chartering. Not that anybody really cares, but ship chartering is hiring out the use of a ship by a vessel owner to another company, the charterer, for the transportation of goods. It may sound straightforward enough, but in practicality, it's anything but simple. There are many types of charter contracts, various cost components, and of course, many different players involved. The two main players in ship chartering are the ship owner and the charterer. So Zim is a charterer. They don't own the ship. There are others as well, the most important being the ship broker. There's also the shipping agent who takes care of the essential import details, and the ship manager who takes care of operating and crewing the vessel. So when you're a charterer like Zim, you're responsible for finding people to maintain the ship and move it from port to port. The term charter refers to the term charter party refers to the contract itself and not to the parties entering into the contract. The charter party defines the rate, duration, and terms agreed between a ship owner and a charterer. Yeah, I did a marine shipping industry video that gets a good amount of views. The ship owner provides the means for transporting cargo from one port to another. The charterer enters into a contract with the owner to hire the ship or space in the ship for transportation, for transporting his cargo. In some cases, a charterer may own the cargo and employ a ship broker to find a suitable vessel to deliver a cargo for a certain price called the freight rate. The charterer may also not have his own cargo, but instead charters a vessel for a certain period of time and trades the ship to carry cargoes at a profit. So yeah, so it's kind of very involved. Yeah, I should do a video on chartering. Oh, Sammy. Okay, Sammy. But Sammy, is it like, it's like semi, like semicolon, SEMI, semi? Or is it actually Sammy? Yeah, Matson. Matson is a pretty big company. So here's the remember Zim used to be number 1? They used to be the biggest shipping company, and now they're number 8. So Kirby is number 1, Matson is number 2. So they're clearly the biggest. Golden Ocean, Starbulk, Danos. Navios is growing the most at 42%. Kex, MATX. Well, let's see how the stocks have performed. I'm sure this is the most volatile. I'm almost positive of that. Kirby, they sell vacuums also, I think, right? Really good vacuums. Did you hear about that ship? I'm sure you all heard about that cargo ship that knocked down the bridge in Baltimore, and a few people died. That's been all over the news. So in the past 5 years, well, Zim wasn't even. a lot of these stocks weren't even around in 5 years ago. Zim is doing the worst. It's down 16% in 5 years. Everything else is up. Let's go back 2 years. So if we go back 2 years, Zim is down 86%. Right. Yeah, I heard about that. A construction crew filling potholes. They did close down the bridge right before it crashed, which was good because a lot more people could have died. So they did communicate to close the bridge, and the bridge got closed. It was just some construction people died, unfortunately. I'm not sure why they were still on the bridge. I guess who would have thought the bridge would collapse? So in 5 years, this stock is getting crushed, down 86%, which is crazy because look at every other company. Star Bulk is down 20%, 2 are flat, and actually Kirby is up. Kirby is the largest tank barge operator in the U.S. So they just focus on liquid products like oil, transporting oil. It's kind of a different animal, transporting oil. Like anybody can transport dry materials. I could transport a car. I could just drive it into another country. But transporting oil, it's much more difficult. Bulk liquid products throughout Mississippi River. So it looks like it's mainly it transports oil in the U.S. Kirby also owns and operates 8 ocean-going barge and tug units transporting dry bulk commodities. So they do some dry bulk, but I think mostly they're oil. Transporting natural gas is even worse. How about transporting liquefied natural gas? What was I? Oh yeah. So they're actually, Kirby's doing well, up 34%. And Kirby does not pay a dividend. That's interesting. Look at Diana Shipping. They still pay a high dividend, 23%. A Grind Rod, they always paid a high dividend. Right. Certain gas can only be transported via pipeline. HPGL. Let's just finish up Zim. So in the past year, Zim is down 58%. Look at Matson, up 86% in the past year. They're right here in Oakland, around the corner from me. Oh, Hawaii. Let's see, in 6 months, Zim is only down 3%. But Google, GOGL, is up 62%. Yeah, rates are up a little bit. The past few months, but still a lot lower than in order to justify buying a shipping stock. They still need to like almost double from where they're at. But Zim still has the most free cash flow out of any company in the industry. They have the best price of free cash flow, the best price of sales, and the most revenue out of any company. But like I said, there's a lag. Like a lot of that revenue was from contracts from like last year or 2-3 years ago. They have to renew those contracts, and rates are coming down a lot. So I don't wait, how could that be 0? I gotta fix these formulas. I think I screwed up my spreadsheet when I was trying to indirect H53. I'll look at it later. I gotta. Hope I don't forget. Yes. I mean, it was so inflated, the price, and so many people jumped into the stock. It was of course going to crash. That's why a lot of people want to know, when's the bottom? When can I go back in? But Zim's been around 80 years, but it just started trading. I wonder if it traded in the past. I think Zim traded on the New York Stock Exchange since 2021. But it traded from 1948 to 2004 in Israel as Zim Israel Navigation Company. But then it stopped trading in Israel. It's been around a long time, but they're kind of a different company now. They weren't like in 2021 and 2022 they like were on another level. They never were that big of a company for their whole history. Until 21 and 22, they probably generated more profits and cash flow in 21 and 22 than like the prior 50, 60 years combined. Yeah. Okay. I gotta actually go. Someone's coming over, and I want to fix this spreadsheet now because I think I messed up the formulas. So I'm gonna sign off. Yeah, thanks for everybody for joining. It was a good stream. A lot of back and forth. And I'm gonna release my Zim video later today after I edit it. Okay, I'll talk to you later.